Hello, everyone. Welcome to today's episode of Zillion Masterclass. And today we will be analyzing, Chandan and I will be analyzing Netflix. And at the end of this episode, we will make an expert recommendation whether you should invest in Netflix or not. And also during this episode, we'll cover if you want to invest in Netflix, what is the thesis behind it? Or if you don't want to, what is the thesis behind that? So with that, let's jump right in. A quick introduction. I'm Gagan Sandhu. I'm the co-founder and CEO of Zillion. And Zillion is a platform that helps you multiply your money and reach financial independence sooner. And with me is Chandan. Chandan, introduce yourself, please.
Hey everyone, this is Chandan Malu. I am a co-founder of scdiver.com. The idea behind scdiver.com is very simple to showcase fundamental data about a stock and then hopefully help you make a wonderful decision either to buy it or not and understand what is the true value of a business.
Great. And if you want to check out, this is scdiver.com. You can take a look at all the wonderful things, all the wonderful metrics that Chandan has pretty much single-handedly built by parsing the SEC website and 10Ks and 10Qs. Great. Also, at the end of this conversation, we will post this video onto our Zillion Masterclass website, where you will also find all the previous episodes where we have covered Amazon, Tesla, NVIDIA, and also generally covered angel investing, real estate investing. So you can find a lot of great content on Zillion Masterclass website. Okay, with that, let's jump right in. So is Netflix a good stock to buy at this time? Before we jump in, real quick introduction about Zillion. We believe that there are 7 layers of personal finance, and the foundational layer is earning, and then saving most of it, investing in informed way, investing those savings into good investments for long term, and then managing your spending, we believe, is the 4th pillar, even though some people on Twitter might disagree with it. And then borrowing the right amount at the right time can actually unlock a lot of good things for you. And to manage all that, you need to do planning. When should you borrow, how much, how to spend, all of that is planning. And we help you in all of these areas at Zillion. And lastly, protecting. Once you've built enough wealth, it makes sense to protect you and your family against any potential downsides. And we help you with all of these 7 pillars. These 7 pillars, we actually I've been doing this research for over 10 years, and I came up with this, like the foundational model for how to build wealth and achieve financial independence. And this is how we are building Zillion. And how, for instance, we help you improve your 401k to improve your investing skills. We have a product for that. If you want to track your expenses, and how you want to see how your vacation, whether it fits the budget and how will it impact your financial independence goals, we actually have tools for that. We also help you figure out if you should invest in real estate, buy a house, or continue renting, and also how much you should save for emergencies, and whether you should invest in stocks or real estate, or what kind of stocks, what kind of real estate. So we make all these decisions super easy for you. Not just that, we actually, through our research, we figured that credit score is a very poor indicator of how good you are with money. It's actually money score that is more relevant there. Credit score is how well you manage the money that you borrow from banks. Money score is how well you manage the money that is your own. So go to zillionapp.com and get your money score. Also, we help you navigate debt in a smart way, and we provide mentors who, most of our product is driven by AI algorithms. But if you're like, hey, I really need help with this particular thing, we have human live mentors. You can talk to them. You can talk to them on the phone or schedule video conference and get their opinion. So check it out. And our goal is to help you become financially independent in 10 years or less by spending 10 minutes or less on our platform every week. Okay, great. Netflix. Chandan, do you want to tell the story of Netflix's growth?
I mean, it's pretty self-evident, right? Looking at the graphs, right? You can see how monstrous Netflix has become with time, and there are certain. I would say there are two big things that Netflix has, I would say, taught me, at least as an investor. A, understanding tailwinds, understanding what's coming in, right? Understanding, like, when Netflix was a very small company, it was fighting with Blockbuster. How do you take over those 100 pound gorillas who are doing some wonderful work in the like back in those days were CDs and DVDs that people used to see, right? And how Netflix now has transitioned from CDs and DVDs to original streaming. Such a wonderful business. Um, it's a it's one of the most stickiest business, I feel, in terms of customers. My wife always, like, everyone, I think, like, I would say 60% of people in the US has a Netflix account, and that shows how popular and how amazing Netflix is. As an engineer, I know Netflix is a wonderful company from an engineering side. The infrastructure is top notch. Like, if you look at other companies, I don't think that they have been able to close to come at heels at what Netflix has achieved.
Yep, yep. And I think very well said, Chandan, that their growth reflects their ambition, their expertise, and the talent they have accumulated over the years in the company, whether it's engineering or production now, right, or sales and marketing unit. One thing though is, and again, this company went from a few billion by 2010s in revenue, about 1 to 2 billion, to now $30+ billion in revenue a year, and growing, still growing. So pretty impressive track record, if you see. But one important thing I want to talk about here is look at the growth numbers, right? This is a company that, if you think about it, 2007-8 is when streaming started, and streaming led to a lot of growth. This is, I believe, when they lost a lot of the content. And also they tried to split the company, and there was a lot going on there. So the growth slowed, and then they started creating original content. The growth resumed. But I do want to highlight this, like 2018, I think a lot of international expansion happened around these 2-3 years. And then you can see the growth has continued to slow. There was I would say, a boom during COVID. But again, COVID boom we have seen in all industries. COVID boom came quickly and went away quickly as well. But if you see the 2018 to now, the growth has been slowing steadily, right? If you remove these 2 years, these few quarters, then you can see this 2018 to 2018 to now 2023, the growth has slowed from 30-40% per quarter year-over-year growth to now 2-3-4%. So this is something we will discuss more. But again, it's still a healthy, growing business, but we will get into more details. This is an important metric that we like to track, price to sales. And just so everybody's on the same page, when we say price to sales, the actual meaning here is what is the market value of the company today, that's the reflected in the stock price, divided by what are the annual sales in dollars for the company. So Netflix right now is at about 6. Okay, so its market cap is about 190. Its revenue is about 30 billion, right? So 190 billion divided by 30 billion, around 6, give or take. How does this stack against other companies? Tech, especially US tech companies, they range between 5 to 10. Google, as an example, is 6. Microsoft is 12, but Microsoft is such a different business. It's a B2B business. I don't think we need to track that here, but tech in general is 5 to 10. Amazon, which is kind of a competitor through its Prime offering, is 2.4, but Amazon, the biggest piece is retail, so not really a comparison. Now, if we look at true comparison, Warner Brothers and Discovery, they joined. AT&T chopped off the Time Warner and merged with Discovery Communications, and now it's Warner Brothers Discovery. The trade at 0.5 in terms of their total market cap divided by total sales. So heavily discounted as compared to Netflix. This is Disney, right? Disney is the OG in terms of content and distribution, right? Distribution lately with their streaming platform. And Disney trades at 2x. And Disney is at, I think, it's at 5-year lows right now. You know, their market valuation is really low. But in today's market, Disney is, you know, 2x its annual revenues. And this is Comcast. Again, Comcast is the most hated company in the US, whereas Netflix is one of the most loved companies in the US. So I wouldn't put them in the same bucket, but you can still see Comcast with its Comcast owns they own Peacock through NBC Universal as well, so a streaming platform, and they own the Universal Studios and NBC, right? I mean, they're more similar to Disney in that sense than Netflix, but you can see they're also trading at 1.4. So this gives you an idea that yes, Netflix seems cheap right now, but only it seems cheap if you look at the past of Netflix. But if you compare Netflix to competition, it may not be as cheap as it seems. Chandan, thoughts?
That's totally correct. I think right now, for all the streaming companies, is actually all companies are at depressed valuations, mostly because most of these companies have huge debts, and market doesn't like that right now, and that's one of the reason they are at very low multiples. Netflix is a leader among the streaming companies. All of these companies are losing money in the streaming business. It's the only company that's making profits, and that's why market is rewarding it right now. It's always been rewarding it for its growth.
Yes, Netflix has been a darling of the markets for a long time. Fang came, you know, Fang wouldn't be Fang without Netflix in it. Yep. So yeah, and specifically doubling down on debt a little bit. The reason market is punishing companies with heavier debt is because companies issue debt for 2, 3, 5 years, maybe 10 years, and when that debt comes up for renewal, well, if you financed at 3% 5 years ago, now you might have to pay 8%. So the cost of debt, just like for us, regular people, financing a house right now is way more expensive than 5 years ago. Same thing for companies. So debt is being punished because of that.
Also, this is a very capital-intensive business. Programming is a capital-intensive part of the business, and I think most of these companies, they are investing in the tech and the infrastructure, and that's why I guess it's going to take some time for the profits to come in.
Yeah. And I think you made a great point, Chandan, that this is a capital intensive, especially production, right? I mean, movies and shows cannot be made cheaply. Maybe AI can change that, and if AI is going to change that, I think Netflix is going to be at the forefront of doing this. But at this time, everything is expensive, and we see it, and that's why they have to. Netflix issued so much debt, and that's why they were cash flow negative for so many years, because they kept pumping money into producing more content, which gets them more subscribers over the long term. Operating profit, Chandan.
Yeah, so I think what Gagan was alluding to, those cash flows, this is where it shows up, right? As you can see, for the 2016, 2017, right? Netflix has almost zero operating margin, 0 to 7%. But now it has been steadily growing. It's almost close to 20%. And what in the current quarter, they have told that they're going to maintain or at least grow this 20% margin. As you can see, the size of the cash flows, FCF is now almost more than $5 billion. And the reason is simple. Until now, Netflix has invested a lot in content, and now those investors are showing up, right? Just a quick back of envelope calculation, right? In a year, Netflix charges more than $100 for Netflix subscription, and multiply that by 100 million users. It's
250 million right now.
Yeah, it's just massive amount of cash flow that they generate, and it's up to them. Like, if they don't invest that year, it goes to the bottom line as free cash flow.
Yeah, and this is also, I do want to point out, this is a classic trade-off, right? You can see until this point, the company is only investing. It's investing because the company knows until this point that the more money they invest in the business, it brings more customers, so more future cash flows. But things started to turn in the last year or so because the debt cost has gone up. Netflix can't just keep issuing debt and all that, right? Secondly, the growth has slowed. So Netflix, again, is run by very smart people, and they understand if they continue to pump billions and billions of dollars into more content, it may not generate hundreds of millions of dollars in new subscriptions. So they are deliberately slowing down some investments. And in return, I would expect Netflix, I don't know, I don't think they've started any buybacks.
Yes, they did.
They did?
So actually, if you look at the Netflix stock, it actually dropped 50% like in the previous year. And one of the reasons it's up is because of these two major reasons that the management decided to use some capital allocation and save some investments. So they did $3.5 billion of stock purchases.
Yeah. So think of this, all these negative free cash flows were, going to shows or marketing or, like things like that. Now, some of these cash flows are going to go towards buying Netflix stock back. Square announced it just in the last earnings call, and Square stock went up, about 20%. So Wall Street loves it when companies say, "Hey, we will buy back stock," and that means the company is cognizant of maintaining profitability and improving the share price in the long run. Okay. Some of the tailwinds for Netflix, and again, it's a great business. And if you look at it right now, about 80 million people in Europe, Middle East, Africa are actually, in the EMEA market, almost 80 million in US and Canada, and almost 80 million in the rest of the world, Asia, Pacific, and Latin America. So you can see it's a third, a very good ratio. And Netflix is a classic international company, right? If you look at it, and again, this is subscribers. This doesn't translate into exact dollar figures, right? Because US subscriptions are more expensive than European, and they're more expensive than Asia. But still, you can see the user base, and because they have such user base, which is quite addicted, so to speak, they have a monopoly on the content they have, right? I mean, sometimes they license content from others, but then the content that Netflix produces, they have a monopoly on that. And that means they can actually increase prices. They have a captive audience. They can increase prices. They are doing it right now as we speak. In the last few quarters, they have constantly come up with newer. One is they actually, if you think about it, the password lockdown is a way for them to increase prices because they're like, hey, listen, if you're using, 3 families are using password somehow, well, now you're going to have to buy your own subscription, right? Or your sibling or your child was using it in their dorm or something. Well, now you have to buy. So that's an implicit price increase.
There's one more thing that happened in the last year. Netflix as a management never wanted to show ads, and they never wanted to go to the ads model. And I think they revisited that decision and started to show ad-based streaming content. And I guess that had also, they have a partnership with Microsoft now, but that has led to that also has benefited them in terms of the share price growth as well as the free cash flow, because ads, customers would love to get Netflix a cheaper price because they don't mind seeing some ads. So it's a win-win. And again, Netflix is testing the model out. It's not like completely rolled out, but it's still testing it. But I think those are some of the tailwinds that Netflix got in.
Yeah, and I would add that I think this is something when we covered Amazon last week, we said that one of the tailwinds Amazon had was Amazon launches products continuously, and one of those products becomes a big one every few years. Say every 2 to 5 years, one product starts taking off and becomes a multi-billion-dollar segment, and eventually even maybe, like tens of billions of dollars a year. They have done it with AWS, with subscriptions, with now pharmacy, so many different things. And Netflix doesn't have that exact thing, but with ads, there is promise. I think ads is one thing. I don't know if we can call it a product, so to speak, but it could be potentially. Right? YouTube ads is an example of where Google makes a lot of money, but again, the content is YouTube is user generated, Netflix is curated, so it's slightly different, but at the same time, a new revenue stream for sure.
We have a slide probably later, but I think it talks about how much percent of the time US customers spend time on the TV. So I think it's a screen time, and if you can benefit from that screen time in terms of showing ads, why not?
Yeah. And I also, one thing I would say, distribution, 250 million subscribers, that's huge. And these are, if you think about it, these are middle class or upper middle class, or most, like most of the developed world. This is highly desirable market segment. So ad dollars, I expect ad dollars to come to this, because this is a distribution channel that is untapped, completely untapped right now. So I totally agree with you. Also, Netflix is the best streaming product. They have not all over the world, and they have content in Korean to Indian languages to you name it, right? So they have hyper localized. They're a true global product, loved as much in, say, Vietnam as in the US. So I think that's definitely a tailwind.
It always creates a wow effect, I feel. That's what
Sorry?
it says. Netflix always creates a wow effect. They were the first ones to introduce skip intro sections, automatic next video in the series. They had some wonderful innovations on that side.
And also a quick anecdote. This was 2007-8. I was working for a company in Boston, and we were a content delivery network. Netflix was our customer. That's when they started streaming. And one of my coworkers, he said he and his wife stayed up late the previous night because they couldn't stop watching one. I think it was The Wire or something like that. One of the first shows on Netflix streaming. And I imagine that like he was so wowed by that we had a meeting to talk about some business, decisions and some tech decisions and all that. We ended up discussing like Netflix streaming for 10-15 minutes of that meeting. And that's the wow effect. And again, I did buy stock at that time, but foolishly I sold it a year later. But I think there have been times when Netflix has clearly shown that they were so far ahead of the game. And actually, because of that, I think Netflix was the solo streaming service for close to a decade, right? They literally had zero competition until Disney woke up, and then Hulu, things got removed, but they were the only ones in town.
Yeah, as soon as this guys realize you can make money out of this shit, yes, why not?
Yeah. And also, another anecdote, as Chandan had mentioned, Netflix is such an amazing technology that, I was working for a company that was a supplier, and Netflix was not just the most sophisticated, they were also the most price demanding company. It was very hard for my company to really do business with Netflix because they would drive the prices so low that they were very good, because the margins are thin in streaming. They're thin to begin with, but because Netflix was so focused on making it a profitable business, from the very early days, they were very conscious of keeping the costs low. And I saw it firsthand. I used to look at some of the reports coming out. It was a great deal for Netflix at that time. Great, some headwinds. And as we just now discussed, Netflix had the entire marketplace to itself for close to a decade when it comes to streaming. And not just for streaming, even DVD delivery. Like Blockbuster was there, and then they slowly started declining, and there was no one else. It was just Netflix. If you wanted to watch it, yeah, the Redbox came along, but Redbox also it didn't ship. You have to go, right? And nothing really caught on. And then streaming, they were the first one, and they never, looked back. A lot of services came, but I should have mentioned Apple is the biggest one. I think Apple is the biggest competition, but competition has heated up quite a bit. Thoughts on that?
Yeah, I think Netflix has been a survivor, I would say. It has from its early days. It's always had competition. Blockbuster was initial competition. It managed to, if you look at the stock drops, like Netflix has a lot of 50% drops in stock prices, and all those trigger points where it faced competition, or maybe the content provider pulled out their content from their network and they had to find some proxy for it, and like Friends or something, right? So Netflix always had like it's been a volatile stock. I would say it's not easy as a stock to hold it for a good time. It's
Yeah,
rewarded shareholders, but it's been it has a volatile journey, I would say.
yeah. I mean, it's volatile, but still not as volatile as, say, Tesla. I think Tesla is the champion in terms of volatility. But yes, Netflix has also been is pretty volatile as well. And Netflix beta right now, it's 1.24. Actually, it's not super bad. It's not too bad. Okay. And also, in terms of competition, I think we can see how competition intensified during COVID. Disney launched and really put in a lot of effort to make the service better. Hulu is now part of Disney. Peacock launched. HBO rebranded itself. Amazon Prime has been there for a while, and Apple has also come up quite far in this. So this is not a monopoly anymore. It was. Now the content is the monopoly, right? So, and the pricing war has kind of started in a way. In that there is pressure. Netflix is still a single product company, and that to me, that is the biggest. If someone were to ask me what is the biggest negative for me personally, why I wouldn't invest in Netflix, it's a one product company. And any great company that I have worked at, I have owned as an investor, is a company with multiple revenue streams. And one thing I've seen is Netflix hasn't been a big acquirer as well. A lot of companies actually acquire, and then sometimes you can't build a product, you buy it, and then you through your distribution. Google is classic. Google Android was a product that they bought. The whole Google the whole Google apps was a product they bought. The docs part of it, right? So YouTube, classic example, the best acquisition ever. Netflix is still one product, but Amazon, if we covered this. There's a video of it. You can go ahead and watch it. It's actually, we covered it, how Amazon is actually, if you it competes with Walmart and Etsy and eBay and Oracle and Microsoft, Google, Meta, Netflix, all of these. These are multi-billion-dollar business lines. Any thoughts on that? The product mix?
Good.
Okay. Another thing is Reed Hastings is, he's in the executive capacity now, right? And Ted Sarandos, I did some research. He's a very capable person. He's been with Netflix since 2000. So a lot of, just super competent. But my question and my concern is, can he envision new products, right? And also, I don't know if many of you know, Ted's background is he came from VHS tapes and DVD world. So he comes from the old world, right? And he was the bastion of the old world, and he navigated really well, and he became the chief content officer and all that. But can he envision something new, literally pulling, something out of thin air, right? Pulling a rabbit out of the hat. I'm not sure. I hope he does. I hope he does, and I hope it reflects in new products coming up, right? I mean, password sharing can only get you so far. It's incremental, it's marginal. The ability to raise prices is marginal. The true innovation has to be in new products.
I think they're probably entering the game space, but I don't know. That's a far-fetched bet, but yeah, they just saw some openings.
Oh, the streaming gaming.
Games.
Oh, okay. Online gaming.
Mhm.
Okay, we'll see.
Streaming.
Again, for a company that's 26 years old, right? 26, something like that, 26, 27. I think, yeah, they should be doing a few more things. Okay, next Netflix. A lot of people have asked me this. Hey, is Curiosity Streams the next Netflix? Is Fubo the next Netflix? Sling was an independent company. Now it's, I think they're part of DirecTV. And this kind of question comes up every time we cover a company. Tesla, Amazon, right? Who's the next Tesla? Who's the next Amazon? And as I think more about it, I feel like there is a reason companies become leaders. They're so good that they leave everybody else behind, really far behind. And I looked into Curiosity and Fubo and all that, and I feel like none of them can compete with Netflix in the long term. I don't know, Chandan, if you have thoughts on that.
It's by far the best. I never see delays in my streaming. It's so good. It remembers where I was last. The recommendations are amazing. Like, as a customer, there's nothing. As a customer, I would say Netflix does everything that customers make it more lazy for him to find things and make it more interesting to find new content that he has not yet discovered yet. And so Netflix does both in both the places.
Yeah. And so if you're looking for next Netflix, I have stopped looking for next Netflix. I invested in Netflix first in 2009 and I sold in 2010. And, I missed it, but that's okay. I made my peace with that. I'm not going to try to look for next Netflix. I would encourage you to look for next great company in a good growing segment. And we'll talk about that later. And again, at Zillion, we offer a lot of these tools and a lot of these companies. You can log into Zillion and look at our investment tools where we will help you discover those.
One thing I would like to add, and I think this is something that I've been learning. None of these companies, Amazon, Netflix, Google, they may not look great in the initial journey, in the initial 5 years, and you would not know it. I think, but as you keep reading about it, as you keep investing in it, as you keep doing it, after every 5 years, you'll see those lights, those things that will give you that signal. Yes, there's something big to happen. And I guess all these companies are good grounds of understanding what led to that hockey stick or what led to that growth. And just reading about them, learning and reflecting upon their growth and what circumstances led to them being one of the greats now is a good source of finding your next compounders. So no one knows. That's if one of us knew, then we would not be here. I guess we all would have been partying at the beach. But I think that's the hard part. But I think like it takes time, and you have to be there. You have to sit. You have to understand, and there'll be some light bulb moments, and that's where you need to think: should we double down or not?
Yeah. And one thing that I have seen to be a good predictor. There are a few that I have seen, and thank you, Chandan, for bringing that up. Is two or three things that actually are signs that a company could be really, really great. First and foremost is customers love the product so much that they can't stop talking about it. They won't shut up, right? Like as I said it previously in this, my coworker parroted for like 10-15 minutes how good his experience was when he first time streamed on Netflix, and Netflix kept saying, watch the next episode. By the way, when Netflix started streaming, they were the first ones, and for a long time the only ones. They would drop the entire season. Okay, they wouldn't just give you one episode per week. They would give you the entire season. So binge watching wasn't a term before Netflix actually did this, right? So my coworker, he was so fascinated that he could watch one entire season, and he lost a lot of sleep because of that. But he wouldn't shut up about it, right? Any Tesla owner you talk to, they are by default, they are the best salesperson. They won't shut up about it. about all the features that exist or might exist at some point in future. Any company where you have customers that are so passionate about the product that customers actually sell that product, it's a good bet to buy that stock. That's one. Second, I would say companies led by visionary founders. Right? And visionary founders, in 3, 5, max 7 years, you will see it. They start separating from the pack. And once you see them, just latch on. And when those visionary founders leave, that also is a red flag. But when you see those visionary founders executing, visionary founders are able to come up with new products in their own market or adjacent markets every few years. When you see them, when you spot them, buy those stocks, and or if it's a startup, invest in that startup. Chances are you will do well in the long run. There are other technical signals as well. We show you all those things in Zillion. Feel free to check that out. But very good point, Chandan. Thank you for bringing that up. Okay, competition. Disney, and right now Disney is down. And they have gotten so much flack for being woke and not being able to execute. They got they promoted a CEO who got fired. They brought a previously retired CEO. Disney is not doing well, but they actually have one great content, arguably the best content in the world, that spans all ages, right? And they have great distribution, from theme parks to now their own streaming service with millions and millions of customers. I think Disney could be a long-term content, long-term competition to Netflix, a legitimate competition. Warner Brothers as well, but I think they'll be a distant third, the way I see it. Their distribution is, yes, they have time out on cable, but that's only US, not really international. HBO was the OG content creator for masses. But again, they have kind of moved from one home to another home, and that has hurt them. Any thoughts on this, Chandan?
I'm with you. On HBO shows are amazing. No doubt about that. I think
Yes.
like in terms of valuation, I guess Disney and HBO are right there. They are actually in a pretty screaming buy in the buy trade. They are at pretty good valuations compared to Netflix. So depends on the long-term view, but
Yeah.
Can they beat Netflix? That we don't know. We'll see.
This is what you were talking about, right, Chandan?
Yes. This is the share of the screen time that people in US are spending their time. So if you see, 8% of people are spending 8 out of their total time. People are spending 8% of their time on Netflix. That's such a big thing.
Yes. So overall,
YouTube, Google.
yes. But the skeptic in me is also looking at this is the net time wasted in the name of entertainment. But from a business standpoint, this is great for the Netflix, YouTube, as businesses. And we can see the broadcast. At one time this used to be close to 100%, right? Then the cable started eating it, and now cable is shrinking. And the last I checked, I think Dish Network or one of those companies, they're really struggling, right? The subscribers are going down. So for instance, in our household, we have an antenna and we have Netflix, maybe one more service, maybe Disney, and that's it. We don't even have, we haven't had cable for 10 plus years, maybe 12 years. So, this is kind of, this is shrinking, and Netflix and others are growing at the cost of this.
It was hugely expensive when I came to US.
Cable, yeah, 60, 70, 80 bucks a month.
Yeah. And Netflix with just $5 was like a big steal that time.
Yes, it started at $5 or $7. It was dirt cheap when it started. Cool. Yeah. So where does it leave us? The market cap, right? Given everything we have covered, we have discussed, we've seen, where does that leave us? So today, the market cap of Netflix is about $190 billion. And the beauty about market cap is, I went to University of Chicago, and it's it is considered the school that really truly believes in the efficiency of the market, right? Efficient market hypothesis came out of University of Chicago. And if Netflix's market cap is this today, then the market feels that this is where it belongs. And if you look at it, the price to sales ratio is 6, which is close to Google's. But the price to earnings is very high, 43. S&P price to earnings is about 23, 24, somewhere around that right now. Price to cash flow is also very high. And the growth rate right now is about 3%, maybe 4. So this is where it's at. Now, if we go a little pessimistic and say, okay, Netflix is not able to create new products and it's not able to grow, at a faster rate, and eventually every company grows at the rate of inflation, eventually. And that's a good company, right? Bad companies will stop, they'll stop growing and they'll get killed. Good companies will grow at the rate of inflation. Now, if Netflix grows at the rate of inflation, then its market cap will likely be a third of where it is now, because the margins, the price to sales ratio will eventually drop. If Netflix is another Disney, then it will trade at the same multiples as Disney or Comcast or Warner Brothers, and the growth rate will slow. However, my hypothesis is that because Netflix is such an international company, 2/3 of its subscribers are international, and Asia and Africa are high growth markets in terms of the middle class growth in Asia and Africa is 5 to 6%. And Netflix is absolutely a middle class product, right? A product for the middle class. And if we go by that, my slightly optimistic scenario is with 5% growth, higher operating margin, right? Because marginal, as a company gets better, it doesn't need to spend as much time and money, and especially with new technologies coming in, their operating margins will go up, and ad revenues will go up. And with that, I expect in the next 5 to 10 years, Netflix to be closer to $500 million, 400 billion or so in market cap. So if you want to more than double your money over the next 5 to 10 years, Netflix is a great investment right now. Any thoughts, Chandan?
I really like the optimistic area. I think Netflix can go there. Actually, it's cheaper from an operating cash flow perspective if you look at the last 12 months, but I like it. Thank you. Thanks, Karan.
Yeah. So again, our overall recommendation, if you believe that Netflix can continue to grow, especially in these emerging markets, then it is a good stock to buy at this price today. The conundrum and the irony of stock market is nobody wants to buy when things are falling or things have fallen, and everybody wants to buy when things are rising. Like almost everybody I know bought stocks in 2021. Almost nobody bought stocks in the second half of 2022 or first half of 2023. Everybody was too afraid. So this is a conundrum.
It's hard to go against the crowd. That's what they say. I mean,
So think about it this way. If a company can make more money in future, you should buy its stock today. And there is a higher likelihood of Netflix making more money in the future because of the way they are operating and because of the way they are launching new products. I think they have a bright future. Great. I think, and again, we cover one stock, one area every week. If you want other ideas on what stocks to buy and explore, please go to zillionapp.com and we will show you some of the companies that you might not have heard of, but they might be good places to look at and to buy and add to your investment portfolio. Yep, zillionapp.com, you get 1 month free. Feel free to explore. And our goal, our promise is if you spend 10 minutes or less on zillionapp.com, you will reach financial freedom. Our goal is to help you reach financial freedom within 10 years. So 10 minutes per week, 10 years to financial freedom. Check it out. And Chandan, thank you so much for joining again. I love doing this, doing a deep dive into companies with you.
Okay, thank you, Vivian, for inviting me in and being such a wonderful host. Thank you.
Thank you so much. All right, see you all next week. Don't forget to tune in Thursdays at 1 p.m. We will cover one amazing company every week. Thank you.